देश भर के सभी दर्शकों को मेरा नमस्कार। मैं प्रतिभा चौधरी, IRS एडिशनल डायरेक्टर PR and PP CBDT New Delhi extend a warm welcome to all of you to another special edition of Samvaad. Friends, the government has introduced the income tax bill in Parliament, a significant step towards simplifying and consolidating the provisions of the Income Tax Act 1961. This proposed legislation aims to enhance clarity, ease compliance, and modernize tax administration. To discuss some key aspects of the TDS TCS provisions in the new bill, we have today with us a distinguished guest from the Income Tax Department. We heartily welcome Mrs. Riddhi Mishra. She is an IRS officer of 2004 batch, presently posted as Additional Director General Vigilance, West Zone, Mumbai. In a career spanning over 2 decades, ma'am has served in various charges including assessment, investigation, TDS, exemption, vigilance. She has also worked in Ministry of Culture as Deputy Secretary while on deputation. She has been a regular guest faculty at NADT and NADT RCs. Ma'am has been associated with the committee constituted for simplification of income tax law from the beginning. Ma'am, we are honored to have you with us today. Thank you, ma'am, for joining us today in this Samvaad episode. We welcome you, ma'am.
Thank you so much, Pratibha, for inviting me here.
Ma'am, firstly, our viewers would like to know the highlights of the simplification made in TDS TCS provisions.
Chapter 19 of the proposed bill, it deals with collection and recovery of taxes, and it corresponds to Chapter 17 of our existing Income Tax Act. Part A of the chapter, it has provisions related to payment of taxes by way of TDS, TCS, advance tax payment, direct payment, credit of taxes, etc. In the existing Act, the TDS provisions and TCS provisions were placed in Part B and Part BB, respectively. In the proposed bill, these provisions have been merged into one part, that is Part B. This part contains all provisions related to TDS, TCS, filing of statements, their processing, consequences of default, etc. Now, in the existing Act, there are 43 sections which specify various sums which are liable for TDS. It depends on the status of the payer or payee. So, in the proposed bill, all these sections have been clubbed into one section, namely Section 393. This section of the proposed bill contains 3 tables applicable to different types of payees, that is residents, non-residents, or any persons, which means residents and non-residents both. The respective table for each category in turn specifies the nature of income or sum, monetary threshold limit, payer, and the applicable rate of TDS. In the table for the resident payee, similar nature of sums have been clubbed together, such as commission, rent, interest, income from capital market, etc. Further, a separate table has also been provided in the section which deals with cases or conditions where TDS is not required to be deducted. Similarly, the provisions of TCS have been merged and placed into one section, that is Section 394. This section also contains one table which specifies the nature of receipts, monetary thresholds, TCS rate, etc. The said section also lays down the conditions for non-collection of tax. Also, provisions relating to the following matters which were scattered throughout the chapter in the existing Act have been merged and placed together as independent sections in the proposed bill, such as certificates including lower deduction or collection certificates, compliance and reporting including filing of statements, processing of statements, consequences of failure to deduct or collect or pay the tax deducted or collected, and chapter-specific definitions.
Ma'am, what is the extent of reduction in terms of number of sections and number of words?
As I told you earlier, Pratibha, that in the existing Act of 1961, TDS and TCS provisions are in Chapter 17 in Part A, Part B and Part BB, consisting of 69 sections. In comparison, in the proposed bill, these provisions related to TDS TCS are in 13 sections only, that is Section 390 to 402, as against 27,452 words in these TDS TCS provisions in the existing Income Tax Act 1961. The proposed bill contains only 14,675 words. Therefore, there's a total reduction of 12,777 words achieved in provisions relating to TDS TCS, translating to a reduction of more than 46% of the original word count.
Ma'am, how many rates of TDS have been prescribed in the proposed bill?
Pratibha, the existing Act provides for 6 TDS rates applicable on sums paid to residents, excluding payments on account of salary or winnings. That is 0.1%, 1, 2, 10, 25 and 30%. In comparison, the proposed bill has rationalized the TDS rates applicable on such sums, which is again excluding salary and winnings, into 4 rates akin to 4 GST slabs. So that is only 0.1%, 1, 2 and 10%.
Ma'am, could you please give an example where any significant reduction of TDS rates has been proposed?
Yes, Pratibha. Section 194 LBC of the existing Act, it provides for deduction of TDS on income in respect of investment in securitization trust at the rate of 25% if the payee is individual or HUF, or at the rate of 30% for others. In the proposed bill, these rates have been reduced to 10% only, owing to the fact that this is a well-regulated and sufficiently organized sector.
Ma'am, how many rates of TCS have been prescribed in the proposed bill?
The existing Act provides for 7 TCS rates applicable on various sums, that is 0.1, 0.5, 1, 2, 2.5, 5 and 20%. In the proposed bill, the TCS rates have been rationalized into 4 rates only, 1%, 2%, 5% and 20%.
Ma'am, could you please clarify with examples whether any changes have been made to the monetary thresholds applicable for TDS on various payments?
In the existing Act, except for salary payments or cash withdrawals, the prescribed monetary threshold limits vary from Rs 2,500 to 50,000 transaction-wise and from 15,000 to 50 lakh annual aggregate. Now, some of these existing limits were prescribed way back in 1975, 2010, 2013, etc. Now, these limits have been revisited and rationalized into 8 monetary thresholds, that is 2,500, 10,000, 20,000, 30,000, 50,000, 1 lakh, 5 lakh and 50 lakh. Some of the examples of the changes in monetary threshold limit. For interest in securities, the limit has been nil right now, which has been changed to 10,000. For interest other than securities, for senior citizens, the limit from 50,000 has been increased to 1 lakh. For others, from 40,000 to 50,000. Similarly, for dividend, for payment to individual shareholders, the limit was 5,000, which has been raised to 10,000. In respect of winnings, the limit was of 10,000 was an aggregate threshold. It has been made as 10,000 as transaction-based, single transaction-based threshold. Similarly, for commission, the limit was 15,000, which has been raised to 20,000. For rent, it had been 2,40,000 a year, has been made 50,000 a month, which translates to 6 lakh a year. For fees for professional service, 30,000 limit has been raised to 50,000. For enhanced compensation, the limit of 2.5 lakh has been raised to 5 lakhs. Similarly, the changes have been made.
Ma'am, what specific measures have been taken towards ease of doing business and reducing the compliance burden?
Pratibha, in this proposed bill, besides the rationalization of rates and threshold limits as we discussed, several other measures have been taken to reduce the compliance burden on the tax deductors, collectors or taxpayers, and also to facilitate the ease of doing business. Some instance that I can point out is, currently if the aggregate annual purchase exceeds Rs 50 lakhs during the year, Section 194Q of the existing Act provides for TDS at the rate of 0.1% by the purchaser. Alternatively, Section 206C1H of the existing Acts provides for collection of TCS at the rate of 0.1% on such purchases. Now, for the ease of doing business and for the convenience of both purchasers and sellers, the TCS provision on purchases has been removed in the proposed bill. Now, there is only TDS on purchases. Further, there is another very positive step taken by doing away with TCS on amounts remitted out of loan from any financial institution for educational purpose. The threshold limit for TCS on other remittances has also been raised to 10 lakhs from the existing 7 lakhs. Another one is, in the existing act, there were higher TDS or TCS rates prescribed in case of non-filers of income tax returns. Also, the applicable monetary threshold limit for TDS on cash withdrawal was much lower in case of non-filers. Ascertaining the filing status before deduction or collection of tax was causing inconvenience to the taxpayers. Therefore, in the proposed bill, the TDS or TCS provisions related to non-filers have been removed. Another significant step is, in the existing act, the benefit of lower or nil TDS or TCS certificate is restricted to specific payments or receipts. The proposed bill broadens the provision, enabling a person to seek a lower deduction or collection certificate for all types of payments or receipts or transactions. I would also like to explain that, for the benefit of the deductors, that nil deduction has been removed as lower includes nil.
Ma'am, we are truly grateful for your time and for enlightening us on such an important subject. Your insights into TDS and TCS provisions in the new bill have been immensely valuable. I am truly grateful to our esteemed viewers for their time and patience. आपका दिन शुभ हो. नमस्कार. जय हिंद.